Well, hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, we had a great summer. We had a nice vacation to kind of end the summer. We all went down to Cabo together. All five of us. Jack's girlfriend went with us as well, Sydney, and we just had a blast. It's a great time. But they are all gone again, if you can believe it. Well, so Jack's been gone. He's in San Diego. But Nicole flew back to Hawaii. She started her new job. She's real excited. Emily flew back to Texas, and she's doing her getting ready for Rush here in the fall. So she's excited. Everybody's back in their place. Everybody's happy. Monica and I are happy to have the house back. You get used to being an empty nester, that's for sure. Anyways, I hope you and your family are having a great summer as well. Market wise, well, what a crazy week last week was. These really the last 3 weeks have been pretty nutty. A pretty big sell-off. The Nasdaq peak to trough was down about almost 14% as I tape this. The S&P 500 was down about 8%, 8.5% from its all-time high. So that's a nice size correction. Of course, the Nasdaq is in an official correction. Anything over 10% is considered a correction. The S&P 500 didn't quite get there, but got real close to being in correction territory. But that's a good size pullback for sure. If you've watched some of these updates before, I've talked a lot about it, that we are anticipating a pullback. We believe it's healthy. I was looking for maybe a 5% pullback, not an 8 to 14% pullback, but nevertheless, it's a healthy thing. We got a little ahead of ourselves. The valuations were a little high. Price earnings multiples, as I had mentioned, had been pretty high, particularly on these Magnificent Seven stocks. Again, that's artificial intelligence is real. It's moving, and these companies were moving quickly. And so we saw a pullback. Well, what caused the pullback? Well, there was really two primary things. As you know, the Fed had raised rates quite a bit, and they held those rates high to try to slow down the economy to get inflation under control. Well, some of the labor markets look a little weaker. Some of the employment reports came out, and they definitely are down a bit. Well, that's good news, bad news. The market didn't know whether to be happy or to cry. And so whether it should be laughing, should be crying about that. So that's the big challenge is that a slowdown in the economy is good from a standpoint of slowing down inflation, but it's bad in that we might be slipping into a recession. So that's what the market's trying to figure out. The second thing is the Bank of Japan had increased rates unexpectedly. Their so-called Fed funds rates, similar to our FOMC, the Bank of Japan, the BOJ, had raised rates unexpectedly at the end of July. Well, there was some borrowing that was taking place, and that money was being used to buy equities and different things like that. And so there was an unwinding that took place. So these things will cause a sell-off. There's usually a trigger that'll cause a sell-off when we get a big move like we got. And so I think, frankly, it's pretty healthy. I feel cautiously optimistic that we won't slip into a deep recession, but it's going to continue to be volatile, as I've been mentioning all along. Expect the volatility, but overall, portfolios are doing well because the bond market is doing well. So unlike 2022, where both stocks and bonds were down together, there are things in the portfolio that are holding up nicely, which is great. So equities, particularly large caps and tech stocks, got hit the hardest, but some of the other investments did okay. So overall, we're in pretty good shape. But if you have questions or concerns, don't hesitate to give us a call. You know we're always here for you. My very best to you and your family. Take care and God bless.